Hey everybody, Gary with Basecamp Trading. Let's take a look at a trending market versus a choppy market and the difference when it comes to trading them. This is our 5-minute chart on gold. And of course you can see today that not a lot of movement going into the FOMC announcement. No surprise there. We don't expect much movement before the announcement, and we didn't get much. We just kind of consolidated, chopped into the announcement, and then, as is typical with the announcement, you get these big swings. We pushed down, shot up, and then eventually climbed to the upside. Consolidated a little bit, and then a nice smooth uptrend for the rest of the afternoon. Now, this was the announcement, and of course, during the announcement, we know we get these large swings, and this was Powell talking, and we know we're going to get swings while he's talking, because the market reacts one way to one thing he says, reacts another way to another thing, and then finally, everything settled down, and again, just a nice smooth trend to the upside. We had numerous targets to the upside, tagged them as we went, and we did really well trading to the upside in gold this afternoon. Now let's take a look at that versus the ES. Here's the same chart in the ES, and here's our consolidation into the announcement. Again, no surprise, we expect that. And then, of course, the craziness from the announcement. We had these big wide bars, and then look what happened. We just kind of went into this choppy mess. We were up and we were down. We had this big topping tail, bar pushed down, then this big bottoming tail, bar pushed back up, and then followed right back down. And you're just big swings back and forth, and we go into the chop and then push up, and then the chop and a push down. Then right at the end, we did get a little bit of a steadier push to the downside, but just a choppy mess compared to the smooth uptrend that we had in gold. And you can see the same thing on the Renko chart. Here's the ES on the Renko chart. Right in here was the FOMC announcement. We had our nice push up, and then chop, and then we made a little bit of a swing down, and then chop, kind of a small swing down, more chop, lots of chop, little push to the upside, more chop, little push to the downside, more chop, and then this kind of finished it off to the downside. But just, again, just a really choppy mess with big swings, And the problem is, when you're in the chop like that and then you just break out into a swing, sometimes you can catch some of this, but then you just push down and then you make a big swing right back up, and then another big swing down and a big swing back up, chop around, swing down a little bit, and then another big swing back up, and chop a bunch, and then get a little breakout here, might catch part of that, chop around again, a little breakout, you might even catch a little bit of that, chop some more, and then a little break to the downside. But just really a choppy mess and very, very difficult to trade. How do you know which one of these are going to actually break to the downside and which one is the chop? Just a choppy mess. And when the markets are acting like that, just stay away from them. And then again, we'll compare that to our Renko chart in gold. And look what we had here. Again, right in here was the FOMC announcement. And of course, we get the chop going into the announcement. No surprise there. Right there was actually the release. And got the big swing to the upside, chopped around while Powell was talking all through here. And then we just started trending nicely to the upside. Nice wick out of the cloud, pull back, another wick out of the cloud, pull back to the 18, another pull back to the 18. This was a much smoother, continuous uptrend. And we had upside targets, and we were just tagging them as we go. We tag a target, get a pullback, get an entry, go up, tag another target, get a pullback, get an entry, go up, tag another target, and just, again, nice steady upstream through the afternoon. And this we can trade. When you're getting those giant swings up and down and back up and down and chop and then swing and chop, swing, chop, swing, that's very, very difficult to trade. Where here, we're in a steady uptrend. Yeah, we got some pullbacks. I mean, that's to be expected with a little volatility like that. But again, the trend was steadily to the upside, giving us nice setups. Our moving averages, for the most part, all stayed in alignment through the entire move to the upside. We're in an obvious uptrend. We're only looking for long targets, and we were tagging the upside targets as we go. Again, versus the chop that we had here, moving averages moving all over the place. Again, there was the initial announcement to the upside, and then the averages kind of chopped under and above and back under, and then down a little bit, and then chopped back up, and then down, back up, chopped around. There was never any steady trend established. Even this little push to the downside, which we actually caught some of on the end of the day, still, a lot of chop leading into it. Just no steady downtrend or steady uptrend like the chart that we had in gold. Much easier to trade a trending market.